Hey, what's going on, guys? It's been a long time. Hopefully, everyone is doing good and you guys are still enjoying the indicator. Today is lesson 2. We're going to talk about market structure. So, the first thing that we're going to talk about is bullish market structure, basically an uptrend, on how we as smart money traders are looking at it. So, we have higher high and we have a higher low. Where that's standing for is basically this higher high over here. That means that this high is higher than the previous high here. We also have higher lows. That means that the low over here is higher than the previous low that's sitting over here. So we have a higher high, higher low, higher high. The high that breaks previous high is basically a break of structure. That's why we put here BOS. And here we do the same thing. This is in theory how a bullish market structure will look like. And of course, what we've learned in previous episode is that with every break of structure, there's coming an order block where we could trade from to trade upwards. So again here, another order block. This is how we can identify a bullish market structure. So this is how it looks like in theory, and this is how it can look like in reality. Later on this video, I will also show you guys an example on how I will mark up the chart, basically, on how I look at the chart. And of course, the indicator that we have is doing it all by itself. So this is just a theory so you guys understand better what our indicator is doing. So here again, we have a break of structure. We get a higher high and higher low and higher high that breaks previous high. So that's what we call break of structure. And then again, what the next break of structure would be is if this high gets broken. So here, the high gets broken. That's what we call a BOS. And here the same thing happens again. This is, in reality, this is how it can look like. This is what we call bullish order flow. So we have a bullish market structure. Then we also have a bearish market structure. Basically the downtrend. Alright, so we have a lower low, a lower high, a lower low. A lower low means that it's lower than the previous low, and a lower high is that the high is lower than the previous high over here. So we have a lower low, a lower high, a lower low, lower high, lower low, lower high. Every lower low that breaks previous low, that's where we put a BOS, so break of structure. And this is in theory how it can look like, and this is in reality how it could look like. So this is just to give you guys a bit more knowledge on how market structure works. So if we have a clear bearish downtrend, then we can look for trade setups in these areas. And then we can look to trade from this point. So same thing over here. Order blocks will pop up over here. We put our limit orders here, and then we can trail down until we reach our profit target. Alright, so let's give you guys a quick view on how I look at the chart. So here we have a lower high. Here we have a higher low. This low is higher than the low over here. And then we have a lower high, because this high is lower than the high over here. Then we have a lower low. This low is lower than the low of the last higher low. Then we have a lower high, because this high is lower than the lower high over here. Then we have another lower low, because this lower low, or this low, is lower than the low over here. Then again, a lower high, because this high is lower than this one. A new low that's lower than this one. Again, a new lower high, because this high is lower than this high over here. And then a lower low, because this low is lower than the previous low. Then something happens. The market is switching into a bullish order flow. So we have a new high that has been created over here, because this high breaks the last lower high. Hopefully it still makes sense. I mean, it's a lot of lows and highs that I'm saying right now, but if you understand this principle, the market is going to look way better for you, because you start to identify the trend more easier that way. And also our indicator is basically doing this all automatically for you guys. So this is just some information, so it will be a bit more easier to understand. All right, so we have the high, then we have a higher low, because this low is higher than the lower low over here. We have a higher high, because this high broke previous high. This low is higher than the low over here. Then again a higher high, and here we have a new low, and then again a new high that's breaking previous higher high. Hopefully this all makes sense for you guys. I mean, this video is all about giving you guys information to make the market understand better for you. And I'm planning on to post a bit more videos, but I was just extremely busy the last couple of weeks, so I didn't really have that much time to create a new YouTube video. And yeah, next video I will be talking more about liquidity levels. Alright guys, enjoy the indicator. You can still get free access to it in the link below, and see you guys next time. Cheers.